Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Tuesday, November 11th, and this is your London Open Prep. The big picture this morning: momentum is building for an end to the U.S. government shutdown, lifting risk appetite, while oil is slipping despite fresh supply headlines, and gold is cooling after a sharp run-up. Let's start with policy and tone. The U.S. Senate has passed a bill to end the shutdown and sent it to the House. And European stocks are set to open firmer on hopes a resolution is close. Asia couldn't quite hold early gains, with markets there breaking ranks from Wall Street, despite a renewed push in artificial intelligence shares overnight. Still, the prospect of Washington getting back to business is nudging the overall mood brighter. On commodities, crude is under pressure. West Texas Intermediate, the U.S. benchmark, is trading softer and broadly sideways, with traders focused on oversupply after the producers group signaled it will lift December output, and reports pointed to record floating storage. That's overshadowing Lukoil's declaration of force majeure at a major Iraqi field tied to recent U.S. sanctions. In short, supply looks ample, and the market is treating disruption headlines as secondary for now. Meanwhile, gold has eased from a 3-week high as the improved risk tone trims safe haven demand, though several desks still describe the backdrop as constructive. One market commentary flags persistent central bank and exchange-traded fund buying in recent months and notes the unusual pairing of rising gold and rising equities. For traders, that matters. It hints at hedging demand even as risk assets climb. In Europe's industrial story, tensions with China over critical tech eased a notch. After a high-profile standoff around a Chinese-owned chipmaker in the Netherlands, Beijing moved to ease restrictions on automotive chip supplies to the European Union, relieving pressure on carmakers. The episode underscores how strategic trade tools are being used on both sides and why Brussels is weighing a tougher stance. Turning to currencies, the U.S. dollar is steady, with the dollar index holding its ground but showing limited upside. The yen has inched away from recent lows as intervention worries keep bears cautious, though gains remain modest given uncertainty around the Bank of Japan. The Australian dollar is softer against the U.S. dollar as shutdown resolution hopes support the greenback, while the Swiss franc is a touch firmer on talk of progress toward a U.S.-Switzerland trade deal. Crosses reflect the risk tone too, with the euro firmer against the yen ahead of today's German and Eurozone ZEW sentiment surveys. In digital assets, a technical blog notes Bitcoin, Ether, and Ripple continue to trend lower. Looking ahead, it's not a quiet calendar. The UK labour market report lands at 7 a.m. London time, with sterling sensitive to any surprises. The German and Eurozone ZEW surveys follow later in the session, offering a read on business sentiment. India's retail inflation is also in focus, and in Washington, attention turns to the House as it considers the shutdown bill. What I'll be watching today: I'll be watching the Aussie dollar against the US dollar for a soft bias if shutdown progress keeps the dollar supported. I'm also watching dollar-yen for choppy, two-way trade, with any hint of Japanese authorities leaning in likely to favor a yen bounce. Pound-yen bears watching around the UK jobs data, where a firm print could keep the cross elevated, and euro-yen for an uptrend if ZEW sentiment improves. In commodities, I'll be watching crude for a drift lower to sideways on oversupply signals, and gold to consolidate recent gains, with dips likely to test the strength of that bullish undertone. The takeaway: optimism is returning as Washington inches toward a deal. But the mix of softer oil and still buoyant gold says markets are constructive, not carefree. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.